Westpac, meantime, has more than tripled its half-year cash earnings as the major bank bounces back from the COVID recession. Joining me now is our business reporter, Edward Boyd. Ed, after suspending its interim dividend, that was about a year ago, wasn't it? The bank will now pay shareholders 58 cents a share. It's higher than expected.
Better than expected. Look, they'll get their dividend payment on the 25th of June, and it's been a pretty good result this morning from Westpac. It's their half-yearly profit. Cash earnings more than tripled. A lot of that is due to last year. They had a lot of provisions on their books, including a $1.3 billion fine they had to pay to Austrac. That all is now finished. Hence, profit is up. It's up almost 190% to $3.4 billion. Cash earnings up 256% to about $3.5 billion. Revenue creeped ahead very slightly to $10.7 billion. But the chief executive of Westpac, Peter King, he says after a challenging year in 2020, the Aussie economy, it's rebounding. Consumer sentiment is at its highest level in more than a decade. Westpac expect the Australian economy to expand 4.5% this year. And they expect house prices to continue increasing. But as more supply comes onto the market, they do believe that house price growth will moderate slightly. We actually saw some data this morning from CoreLogic showing in the month of April, house prices increased 1.8% as opposed to 3.2% in March. So CoreLogic are starting to see that moderation come through in their data as well.
OK, well, first home buyers now account for about 13% of Westpac's mortgage book, and that's up from 9% last year. What does that tell us?
Well, it tells us that people are really taking advantage of these record low interest rates and they're getting into the property market. So, yeah, Westpac has grown from 9% to 13% of their mortgage book for first home buyers. And we heard from NAB's chief executive a couple of weeks ago saying first home buyers are about 20% of their loan books. So more first home buyers are getting into the market and they're taking on pretty large mortgages. A year ago, the average mortgage at Westpac was $276,000. It's now about $367,000. So owner-occupier loans have been growing at Westpac and their mortgage book is now worth about $444 billion. And that is really all due to the cash rate being at record lows. And that's helped people get ahead on their mortgages too. About 72% of Westpac customers are currently ahead on their repayments, and that's a good sign. And with the cash rate at record lows, probably until 2024, I think we can expect more first home buyers to continue getting into the market over the next couple of years. So Westpac reported their results today, Laura, and later in the week we've got ANZ and NAB to go. So they're the first of three of the big four.